Today we're tackling a really big one. A market thriller, you could say. It involves alleged manipulation by Jane Street, one of the world's biggest trading firms, right, in India's derivatives market.
Mm-hmm. And it's all laid out, or at least alleged, in this huge 100-page report from SEBI, the market regulator in India.
Exactly. So our mission today is basically to unpack how SEBI says Jane Street manipulated the market. We're talking huge profits here.
Absolutely massive sums.
Yeah. We'll look at two specific strategies they allegedly used. The idea is to kind of cut through the jargon and give you a clear picture of what went down.
And we're basing this on that SEBI report itself, plus some analyses that really dig into the mechanics of it all.
Okay, so let's get into it. The big headline first. SEBI has actually barred Jane Street from India's securities market.
Right. This isn't just whispers. It's a formal finding based on that very detailed report.
And the numbers involved. They're just staggering. What did the report actually say about the profits?
Well, get this. Between Jan 2023 and March 2025, Jane Street apparently made total profits over 36,500 crores across 4 accounts.
36,500 crores.
Yeah, but, and this is crucial, SEBI zeroed in on over 4,800 crores of that. They're calling that chunk unlawful gains, made through manipulation.
4,800 crores. Unlawful. Wow. Okay, but here's something that caught my eye, and it seems a bit weird at first glance.
Mm-hmm.
The overall profit, that 36,502 crores,
Mm-hmm.
it's actually less than what they made just in index options, right?
Yeah.
That was something like 43,289 crores.
Exactly. That's the telltale sign. It seems contradictory, but it points directly to the first strategy SEBI talks about.
The intraday index manipulation strategy.
That's the one. The reason the total profit is lower is because they actually lost a lot of money elsewhere.
Ah, okay.
Yeah, over 7,700 crores in losses combined, mostly in stock futures, some in the cash segment, some in index
So
futures.
those losses are the key.
They're a massive clue. It unlocks how this first strategy supposedly worked.
Okay, walk us through it then. That intraday index manipulation. SEBI used an example, right?
Yeah.
January 17th, 2024.
They did. It's a pretty clear example. So picture this. Morning session, 9:15 a.m. to about 11:46 a.m. Jane Street, allegedly, just starts pumping money in, buying Bank Nifty stocks, buying the futures, huge amounts. 4,370 crores.
Wow. Just sheer buying power. What does that do to the market instantly?
Well, exactly what you'd expect. Prices of those stocks shoot up. And because they're heavyweights in the Bank Nifty, the index itself gets dragged upwards significantly.
Okay, market's rising.
Right. But then right at the peak, when things are looking really bullish because of their buying, they do the opposite in the options market.
The opposite, how?
They take massive bearish positions, buying huge amounts of Bank Nifty put options, selling huge amounts of Nifty call options.
Okay, wait, so they push the market up with stocks, then bet on it falling using options.
Precisely. And the scale of these option bets was enormous. Over 30,000 crores. That's like 7.5 times bigger than the stock positions they just built up.
That's incredible leverage.
Yeah.
So what's the next move? They can't just leave it there?
Nope. Phase 2 begins.
Hmm.
From about 11:49 a.m. onwards through the afternoon, they dump everything.
All those stocks and futures they bought in the morning.
Every single one, aggressively sold off. And you know, what happens when you suddenly flood the market with sell orders for major stocks?
The index tanks.
Bingo! The Bank Nifty index crashes. And guess what happens to those massive bearish option positions they put on earlier?
Huge profits.
Yeah.
Because they were betting on the fall. They basically engineered.
Exactly. SEBI's argument is that the stock and futures trading was just theater, a front.
A way to move the index where they wanted it?
Right. They didn't even need to profit on the stocks themselves. In fact, they lost money there, remember?
Yeah, those 7,700 crores in losses across futures and cash.
But those losses were dwarfed by the profits they made when the index crashed onto their option positions. That explains the whole P&L puzzle perfectly.
The scaled influence is just hard to fathom. Did SEBI quantify the impact on the market that day?
They did. For some key Bank Nifty stocks, HDFC, ICICI, Axis Jane Street's trading apparently made up something like 25% of the entire market's traded value that day.
A quarter of the volume from
Yeah.
one entity.
Yeah. And look at the index move. On that specific day, Bank Nifty first jumped 600 points, that's about 1.26% in the first half hour or so, only to then crash over 1,400 points, which is like 3% by the end of the day.
And the profit from just that one day's alleged maneuver.
SEBI calculated it at around 730 crores for one expiry day.
730 crores in a day. Okay, that's strategy one. But you mentioned a second one, the extended marking the close strategy.
Yes. Similar goal controlling the index for options expiry, but a different approach, especially with timing.
How so?
With this one, most of the day, say from 9:15 a.m. until about 2:30 p.m., Jane Street was reportedly pretty quiet. Low volume, maybe some passive trades, nothing directional, just watching.
Lying low.
Right.
Waiting.
Seems like it. Then, in the last hour, maybe hour and a half, SEBI calls it the aggressive window, 2:30 p.m. to 3:30 p.m., things change dramatically. That suddenly take aggressive positions in options, while at the same time, actively manipulating the underlying stocks in the cash market.
So not a big midday swing like the first strategy, but focused entirely on the closing price.
Exactly. The aim was to make sure the index settled exactly where they needed it to be for their options to expire profitably. Pinpoint control at the close.
Ah, okay. Now, many options traders, they talk about those weird 3 o'clock candles. The last hour moves, or sometimes lack of moves, that seem to defy the day's trend.
That's a really good connection. This strategy could potentially explain some of that.
Like the market might be down heavily all day, say Bank Nifty's off 300 points, but then in that last half hour, it just goes flat, or maybe nudges up just enough to finish at a specific level.
Right. SEBI gave an example, July 10th, 2024, where something like that allegedly happened. The market barely moved in the final stretch, settling right where Jane Street presumably wanted it.
How could they allegedly control the price so precisely at the close? That seems incredibly difficult with market forces.
Well, the report suggests they were doing this by essentially trading with themselves, buying and selling between their own different affiliated companies.
Creating artificial volume.
Exactly. Generating huge volumes on paper. But the real goal wasn't genuine price discovery. It was pushing or holding the index price right at their target level. This meant they could potentially profit whether the market was naturally moving or not. If the price was already good for them, they could step in and just stop it from moving against them.
That's a whole other level of control. So we've got these two complex strategies, potentially massive profits, some identified as unlawful. What does this mean for, the average person involved in the market?
Well, that's a big question.
Because SEBI only looked at 18 expiry days,
Yeah.
right, over 2.5 years. What about all the other days?
Yeah.
All the other expiries?
That's the $1,000,000 or rather billion rupee question, isn't it? Is this just the tip of the iceberg? We don't know.
It certainly highlights that there are, let's say, big fish out there, sophisticated players, maybe even a derivatives mafia, as some call it, with strategies most of us can't even imagine.
Absolutely. These alleged actions show the kind of advanced, potentially manipulative strategies that can exist.
So for you listening, the takeaway isn't necessarily fear, but maybe awareness, humility.
I think that's fair. Understanding that these forces can be at play, that market movements aren't always just pure supply and demand, especially around expiry times.
Yeah, knowing that powerful entities might be influencing things in ways that could impact your own trades, even if you don't see it directly.
So just to quickly recap, 2 alleged strategies from Jane Street: the intraday index manipulation with its big swings, and the extended marking the close for pinpoint expiry control.
And staggering amounts of money involved, with SEBI flagging a significant portion as unlawfully gains.
Right.
But maybe the final thought to leave everyone with is broader. If manipulation this complex, this large scale, can potentially happen and go mostly unseen for a long time, what does it really take to make a market truly fair, truly transparent for everyone?
Yeah.
And maybe, how do you, as an individual investor, navigate a world where these kinds of powerful undercurrents might always exist just beneath the surface?
That's definitely something to think about. It's not just about this one case, but what it implies about market structure itself.
Definitely food for thought. Something to mull over as you watch the markets.